Okay, so I just wanted to do a quick video explaining a little bit more about how I work. I don't know, you seem interested, so I'm going to give it a bash for 3 minutes. Um, Firstly, just want to explain how much money I make and how I kind of determine that, and it is a little bit varied. Um, for example, if we look at the volatility index here, um, you can see that it's 15.53 to 15.63, so that's a 0.1 spread, very tight. And I base my profit upon each point. So yesterday was a classic example and a very clean example. It usually doesn't work out this way, but say I take 1% of the account, so that would be 11,000, and then I bet 11,000 per point on the volatility index. I don't usually use this side of things. I use my own software because I've got to manage more than one account, and it just is a little confusing. So you can see that it's not exactly the right amount for this, but if I bet this here and press buy, for example, it'd be a big fucking mistake today because the VIX is going to roll over. So I won't. Should I? Shouldn't I? No, fuck off. God, I'm mad. Anyway, so if I did that and the VIX moved 1 point, I would make £11,000. I wonder if I can blow this up so you can see it a bit better. Yeah, that works. So if I did this and the VIX moved exactly like what happened yesterday, I didn't sell the April because it's rolling over. I actually sold the May VIX. I don't usually use things on this side, and get that up in a second. But let me just get that up now. Sorry, I keep saying I don't usually use things on this side. I mean, I keep it open, not this one, the smaller one, because I need to sometimes reference whether the trades are going through properly. But I try not to trade from this because it gets fucking messy, and it's not my system, and I don't like change. So I've got 7 black shirts with the same fucking thing every day. Every good woman that I've dated has said, you need to expand your wardrobe. Like, I've got a big wardrobe. It's just I've got 7 of the same shirts, 7 of the same trousers, 7 of the same everything. I really hate change. Anyway, so this is a better example. This is the May VIX here. I can't really go back enough. I wonder if it's going to crash my browser. Fucking IG. That's why I don't use this bullshit on this side, because it makes my browser stall. Anyway, so let me just get something in perspective here. So let's just say, where were we yesterday? Here, sold it somewhere here. 17 point, actually was 17.28, so maybe somewhere around here. I don't know. Somewhere around here. Sold it somewhere around here, 17.28, and then we bought it back at 16.18, which was somewhere there. So basically, I sold it because I saw the oil short squeeze coming. I knew the correlation between oil and the S&P was going to drag the market up, thus crushing volatility yet again. But it was just so fucking obvious, and it just fell off a fucking cliff face. Things have been exceptionally quiet. It hasn't been helped by the fact that April's rolling over tomorrow. This is the last day of trading today. and it's just I can't trade April because if I get stuck in a trade, we'll absorb that loss and the rollover. So that's also been somewhat of the issue. Anyway, I don't know what's going to happen today, and this is the way I was trained. I wanted to mention this. I have had actually extensive, very intensive training at various points because I wanted to just learn as much as I could. So there's only three answers when you're trading: yes, no, and I don't know. And I use the I don't know a lot because unless I'm fucking sure or I'm the opposite of fucking sure, those are like trading areas. The I don't know, if you imagine the yes is 10% on the left, then as you move right, the I don't know is like 80%, and then the no is the other 10. So you have like this this three-part like decision tree for me. And when it's I don't know, you can't trade. So that's why I end up sitting out for such a long period of time. Also, volatility's been so fucking low and moving just so grindy in one direction. You need moves to be able to do stuff, because if it's kind of doing this, you get trapped a lot and you end up scratching trades, or worst case, take one off for like a tenth of a tick loss. And it just like, this is the way you just death by a million cuts, this kind of action here, where there isn't really a clear direction. And the direction really is determined by the S&P, of course. So this is an instrument that I end up watching an awful lot. So you can see the S&P is flying up today, but the VIX is not responding. Now, as I said yesterday on the text on the Skype thing, the S&P, the VIX has been broken in terms of the correlation between the S&P somewhat, because there's a lot of people who are long the VIX and are absolutely being crushed because they're like long-term players, big hedge funds, institutions, that kind of stuff, and they're being absolutely smashed. So what you saw yesterday was a double whammy. You saw the oil shorts being crushed because oil fell off 7%. Everyone started selling oil. I thought, yeah, you fucking guys are going to get smashed up, because when there's a sharp move down, there's a sharp move up. And it was such a sharp move down, there was tremendous pressure going down. But then all the big players came in and they started buying oil 7% off. There's guaranteed 2, 3, 4%. Actually, it made a full recovery and then a little more. So it went down 7 and up 8. Think about how fucking insane that is. A 15% range in one day. It is fucking lunacy. Anyway, you want to lose all your money, go trade crude oil. That's the fastest way to go broke. Anyway, so I saw that happening because the correlation is virtually 1-to-1 at the moment. And this does change, by the way. Correlation between crude oil and the S&P does change. So you have to be very aware of the correlation, because once crude oil goes back to 50, 60, or even 45, and everyone eases off, the correlation might be like 0, and it just like they start acting independently of each other. So, but I know when crude oil gets crushed, the correlation's like 1-to-1. I know that because I used to trade futures a little, and I traded crude oil, so I'm pretty switched on when it comes to trading crude oil. I made a little money actually, but it's a really hard game. So that's how I saw what was happening yesterday. Now I wanted to just go through some of the things I look at. Part of this is I'm not going to be able to explain, not because I don't want to, is because I can't. There's so much stuff that I take in. Like I've got Bloomberg going, I've got Twitter, I've got the Associated Press. So I'm very aware of what's going on in the world all the time, because I think that gives me a little edge. I'm also looking at the euro. Oh, that's the wrong one. I told you I don't use this fucking thing. Euro, USD, and then the euro. Oh, sorry, the dollar basket. So dollar basket is obviously a basket of US dollars, or the US dollar crosses, the FX crosses. So The dollar basket goes down, the euro goes down. Let me get rid of this fucking thing because it's going to confuse us. So the dollar goes down. I just got rid of the wrong fucking thing. Jesus Christ. So the dollar gets weaker, which is, in this case it is. You can see that the euro's 0.1 up, but the dollar basket's down. This correlation is fairly weak, but I guess if I want to explain it properly, or at least in a way that you may have a chance of understanding, the dollar correlation is fairly weak, and so I have like a group of signals, maybe like 15-20 signals in my that come at me, and I put a weighting on each of those signals. This is just like fucking SEO, by the way. So I put a weighting on each of the signals. Now the dollar signals are weak to me. They're strong, but they're not the strongest, should I say. So on a scale of 1 to 10, maybe they're like a 6. The strongest signals, obviously, what's happening on the VIX itself, because you can't argue with what's actually going on. Second strongest signals, obviously, the S&P, and because the way, I'm sure you know the way the VIX works, it's determined by how many put options are being bought. It's a lot more complicated than that, but in the most succinct way, that's basically how the VIX is calculated. So more fear, more put options being bought, the higher the VIX. So the reason it started getting crushed yesterday is because everyone was long the VIX, and then everyone started covering their positions, and basically started selling the VIX to cover, and it just started crushing it. So all that selling pressure hitting at the same time just crushed the VIX, and they made a disconnect between the two of them. So you also saw me talk about flashy blue and red things. Now these are the flashy blue and red things. Now this is something I couldn't explain on Skype, but you can see how they're just ticking along, blue, red, blue, red. Once these start having some kind of consistency and they start hitting, you'll see they go a little more solid blue, a little more solid red. I kind of, okay, so look, that's going red now. Right, so we'll see the S&P come off, and you can see it's just come on. Let me just change this to like a tick, and I can show you. Right, so let me see if I can do a live demo here. This is really on a really micro basis, but I look at this to see where the starter moves are coming. So there isn't a move coming now, but I may be able to show you how I'd look at this. So, okay, so it's looking a little like there's a little bit of pressure building. Now the S&P's up, and I don't know what's going to happen, but I expect a small pullback before the open, and then a probably reverse. But it looks like it's going to come off a little bit here. And you could, what I'm looking for are basically big splots of color. So it looks like it's going to come off a few ticks, maybe a few points now. So we can watch this here. It's 6.75, right? And I think we'll probably see half a point to a point come off just by looking at the pressures building. You can see the reds there building. So again, this is one of my signals that I look at. See the reds just flash up. I mean, you've got to be able to tell the difference of the intensity between the blues and the reds. It takes a lot of practice, but that's kind of the way it works. That's again one of the signals, and that's something I use to get into positions and get out of positions. And this is why when you imagine staring at this for for 10, 12 hours, that I start to get a headache, because all I'm doing is staring at this, especially yesterday when you're trying to take your profit. You know, I was fucking fried. I went to bed straight away. I think maybe I had something small to eat and I just went straight to bed. So yeah, I was asleep by 10 p.m. Let me check my Fitbit. I had a great sleep. I was fucking screwed though. So yeah, 10 p.m. right through to like 7 a.m. I was fucking screwed. Anyway, so remember we started at 6.75. We stopped looking at this, but I think that we're going to come off about half a point, maybe to a point. So we want to see 5.75. Not really trying hard. Hang on. Excuse me, I just had to cough there. So I'll just move on. But like as you can see, I call them the flashy blue and red things. They are signals that I use to get in. Then I also look at, this is in hours, the MSCI are these indexes in the other world, so everything but the US basically. And wow, this thing's on a fucking tear. Jesus Christ. And then you can sometimes see, if you're looking at this, when it goes a half tick. So instead of going 7, it went 6.87. That's usually a little sign of weakness there. So I'm still going to stick to my side. You know, I wouldn't be surprised if we see 8, because the trajectory is just up. But I just wanted to give you a little demo. I'm going to stick to my side, saying I think we're going to come off. Oh, maybe we're not. Right. So here we can see. Look at that. The VIX is still crashing. So the VIX is pointing down. That means the market's wanting to rally. So wow, look at that. 7. Wow, I don't have to take my thing off. I'm a little bit cautious about this area here, because not for this video. I'm just telling you as an example, because we're at 2100 now. The whole number, so that the 100 serve as a lot of resistance. I don't do a lot of technical analysis, but I'm aware of the levels. So 2100 is a very, very strong level, which there's an extra spread on here as well. So the futures would be just a little bit lower. But once the futures, I wonder what the futures are at. Once the futures get to so the futures are 5 points off. Once the futures get to 2100, they're probably going to bounce off. Jesus, look at that. Fucking thing is ripping like a motherfucker. Wow. So this is a kind of a dangerous area to trade, because if you sell the VIX, look, the VIX doesn't have that far to go. I mean, it's maybe got 2 points. Yeah, we can make some money. But like just at this area here, it's very, very dangerous, because if this thing bounces, the VIX is going to reverse straight away. So like I'm very much in the area of I'm very cautious today of what's going to happen. If this gets above like 2105 and holds there, so like 2107, 2108, and holds, it has some ability to stick, then we'll start shorting the VIX again. I think also what I wanted to say was, like, we haven't had like a very good run because volatility's been so low. I mean, I am a very cautious trader anyway, but what I wanted to do was I'm going to just try and step up the aggression, maybe like 20%, especially at the moment because it's fairly easy to trade. It's not like a lot of sideways action. So I'm probably going to wait till closer to the open to see this, because right now I'm not doing shit. So moving on, some of the other signals I trade are this is the 30-year, so it's called the Ultra Bond. Now usually on the futures this is in fractions, but they've decimalized this for some reason, probably because English people don't understand fractions. So this would move in increments of 32, so fractions 1 over 32, and they've just converted that. I don't look at the 10-year that much or the 2-year that much, because they don't move as much. So they don't give me like a really strong correlated signal. Of course, I also look at Brent crude, as you saw yesterday. I look at what's going on the FTSE, but though the FTSE's comprised of a lot of mining constituents. So you see oil go nuts, you see the FTSE rise, but it does seem to do its own thing. That's why I got like the basket of other stock exchanges here, sort of like the dollar basket. Of course, this is somewhat off and only works in hours. Gold is very poorly correlated. I mean, the correlation is actually 0, so it can be up, can be down. But at the moment, with the safe havens, so the safe havens are the dollar, the yen, and gold, and treasuries, of course. The correlation's usually quite good. However, as you can see today, the market's going up and gold is going up. But normally on a day-to-day basis, they work somewhat in opposites. However, what never fails is the treasuries. Treasuries are down, markets are up. VIX is down, markets are up. As I said, the dollar's a little more iffy, but you can see the dollar's down today, markets are up. I guess those are kind of the main things that are coming at me. Then, depending on, this is nothing compared to in hours. When these things really start going, it becomes a lot more obvious as to what's happening. And you can start seeing like the blue and the red flashes, and they start hitting. And once they start hitting consistently, you can sort of start to read what's going on. Of course, I've showed you the my put-call ratio thing. Although, like this is like about what, how many hours before the open? 4.5 hours for the open. So like nothing's really going on. And I guess in a nutshell, that's kind of the main stuff I tend to look at. Of course, I'm looking at the news and Bloomberg and Twitter, not just Associated Press. I follow a bunch of professional traders as well. And so there's, I don't know, I'm probably explaining like 7 or 8 there. But there's probably like a bunch of others that I'm not even thinking about at the moment. Just small things that I'm listening to across the day. For example, here the Tech 100, that's the Nasdaq, and usually I have the Russell on here as well. So usually I put the Russell on as well. As I said, I don't use this account. This is I just have it open from time to time to make sure the trades are going through correctly. So that's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah. So as I said, 15, 20 things that I look at, and that kind of comprises the information that I'm constantly absorbing, like at a very, very, very fast rate. In the back of my mind as well, I have the global events that are going on. I try not to think too much in advance. Like, yes, we're all expecting a market crash, and but I know my crystal ball is fucked. I can't determine the future. I can only go on what I see. So that's the trick to trading. I mean, I don't really call what I do trading because I think I'm not really a trader. I'm a risk manager, and that's it. trading is risk management. So I put on a trade which I feel is an appropriate size. Usually I start around 1% of the account, and then I move up from there. And sometimes I come in and out. So yesterday was a very nice example of how you make 1%. It was like 1.1%. Basically, the VIX moved 1 point, and that's the way I do it. It just is an easy way. Now, every day is really not that clean because I may come in and out of a couple of little trades. If a trade is going against me 2 ticks, but I can see the market's moving up, I may add a little more. But I kind of know from a VIX perspective how much I'm making. Usually I have to wait till afterwards and just do the numbers and see how much I made there. But I hope that gives you a little more insight into how I work. I think I don't know. I guess I'll sum up by saying this: there's so much stuff coming at me, and I've studied this for so long, like for 4 or 5 years, very intensively, probably 10 in total, but 5 knowing that I wanted to be a professional money manager, trader, whatever you want to call it. That I probably have a brain of like 1,000 pages of just knowledge. My communication skills are not good, so I don't really articulate what I know that well. And also, I don't want to give the impression that I'm, interested in too many other things, because, of course I am, but I'm very, very focused on what I do. I keep thinking to myself, I need to open up the strategies a little, but then I think to myself, we could do some spreading like I showed you on the pictures and stuff. I know I can do that, I can trade that, but it just makes it a lot more variable, and I don't know, but this works, and like it's just a quiet period. Like it'll get better because now we're doing the rollover, and the volatility will pick up in the back month, and we'll have some space to play. Right now we've got no space, and that's the thing. The bottom of the VIX is the lowest it's ever been. It's like 11 something, 12. So you can see there's like no downside left, and this is rolling over today, but here we've got a little more space to play. So it'll pick up a little bit after tomorrow. Well, today really. Especially once it rolls tomorrow. Fucking hell, this thing's on a fucking tear. Jesus. This is interesting actually. You can see. I don't know if you're able to see this, but like the US 500, that's the S&P 500's up 0.37. Wall Street's up 0.34, and the Tech 100, that's the Nasdaq composite, is up 0.38. When you see, like, this is again one of the things that I know. Like, I know a lot about a lot, but not a lot about a little, which is about trading, and market microstructure. Really, if I have to sum it up, that's really where I know a lot, is market microstructure. So how the plumbing of the markets work, and how things move on a short-term basis. When it comes to the bigger picture, I know fucking nothing. But you can see here, like, these are all very, 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 very close together. Even the Russell's up 0.45. So these are all within like basically 1/10 of a percent. And when you see the market walking in lockstep like this, you know that this is professional money moving the market now. And this is a very strong move to the upside for the moment. I mean, this may change on the open, but for the moment, the market is walking in lockstep, and so all the indexes are moving together, and that's just like, it's like double confirmation that the market's actually moving in a certain direction. So, as I said, like, it sounds really wanky, but if I say this is the way I trade and these are the things I look at, there's a lot that I can't really explain. It's just about, and I always say to people, say, how do you do it? I say trading's like a lot about experience. It's like 20% skill, 50% experience, and 30% emotion. And you have to have a lot of discipline to do what you do and to do what you say you're going to do. And usually when people say they want to be a trader, well, I show them normally I'd ask them a question is, if you fuck, this is a long monologue, I need to cut this off, but if you if you could rob a bank, online financial fraud, and you could get £1 million, and no one would find out, no one in the world, zero, okay, what would you do? Would you steal it or not? And there's zero chance of you getting caught. I hate the banks as much as anyone. And then I ask them that question. And if they say yes, they would steal it, then I usually say trading's not for them. Because if you're not honest with yourself, and an honest person in general, then you can't really trade, because dishonest people lie to themselves a lot. And if you're lying to yourself all the time, you don't have clarity in terms of trading, and you don't have the discipline. Like you say, okay, I'm in a losing position, I'm going to get out. Or if you don't have a lot of self-honesty, if I put it that way, because a lot of people are honest people, they're just not honest with themselves. But if you don't have self-honesty and the ability to say, I'm going to cut a losing trade and take a loss, or I'm going to get into a position for this reason and that reason, it's not an emotional thing, then you have a chance. But like my mate, like, who just seems to keep, it's just like a money leak, like he's just like a money murderer basically. He's a smart guy, probably smarter than I am, but you have to have a certain mindset, and again, this is something that I've learned over 5 years, and it's something that I practice every single day. If I wake up, I look at my phone and it's like 7:24. I say, okay, I'm going to lie in bed till 7:30. I get out of bed at 7:30. I don't go, okay, just another 5 minutes. I make sure, like, whenever I make myself a promise, I keep that promise, because it's a practice of my discipline every single day. Everything I do is a practice of my discipline. Because it's taken years to, and my ex-girlfriend said this to me. She said, 3 people have said this to me since I broke up with my ex-girlfriend. My ex-girlfriend, her parents, and someone else said this to me. They said, I think it was another girl actually, said, you don't show any emotion. And I think part of that is I've almost reprogrammed myself to live in a to not let my emotions rule me at all, because I think you can't make emotional decisions in trading especially, but in life, and make sure that they're good decisions. Non-emotional decisions are much better in terms of actually making clear decisions which has the best outcome. It makes life a little dull. And I think also part of who I am is I'm a Stradivarius, so a musical instrument that plays very well when he's in tune, but he goes out of tune, he doesn't play very well, and he goes out of tune pretty easily. And that's why I don't like disruption in my life. I don't like noise. I don't like people coming to my house. I wear the same fucking shit every day. I get nervous and weirded out really fucking easy. Go to the same shop, same hairdresser, same fucking everything. I don't like my friends coming here. I think that happened the other day actually. This guy, my friend, turned up. He didn't phone me before, and he just turned up while I was watching the market, and I had to say, you can't come in, because that kind of disrupts my kind of mental place for maybe 30 minutes, even just someone coming to the door. So, a part of this is my focus, my programming of myself to have this, because this is something which I said we want to do for a finite amount of time, right? So we want to maybe build this up to 50 million, 100 million, whatever it might be. I my personal goals have 50 million. So what does that mean? Maybe 100 million, something like that. So we get it to 150, and then I want to stop, because I think this I'm here every single day, and I do love it. So it's not hard work, but I want to experience other things in life as well. I want to have the freedoms. Not that I think that's going to make me happy, like you said, but I want to have the ability not to ever think about money ever again. That's my goal. It's never, ever, ever, ever to think about money. You have money in your bank, you never have to think about it. You're going to buy, you never have to look in your bank. Of course, it's not all going to be in my bank. It's going to be in some kind of investment thing. But You know, this is my life at the moment. You know, like in the morning I wake up, Jesus is going on. That's the last thing I'm going to say. The morning I wake up, I check the markets. Then I'll kind of watch the markets loosely up until like maybe 12. If there's something going on, I'll be straight at my computer from like 8, and I'll sit here until like 9, 10 o'clock. So that's like 14 hours straight at the computer. And you know, I do love it. Right, the market's coming off here. So here we go. Here's a VIX spike up. Market's coming down. What's the treasuries doing? Here they are. Oh no, where's the treasuries? Open the treasuries. Like I said, this isn't the side that I use. I use the other account because that's kind of set up a lot more nicely, the little one, just for history. So, so here's the treasuries coming up. Let's try and get this set up nicely. Right, so treasuries are spiking, VIX is spiking, market's coming off. So let's see now. We want to see some red splodgy things. Oh, fucking treasuries are coming off again, motherfucker. Still gonna stick to my side that I want to see a pullback. I reckon before the open we'll see a pullback, probably to at least 2096. I'll watch that. I'll let you know once you watch this video. Oh, another little signal before I forget. Is I look at the highs and the lows. That's like really important as well. So when things are very close to the high, like the S&P here is at 2101.9. That's bullshit anyway. This is just a synthetic market. Things don't move in fractions of a tick. It takes 0.25. But you can see the high is 2103, and this is 2102 for all intents and purposes. This is very close to the high, so when things are very close to the high, they tend to keep magnetizing the high. And if something's pulled back, if things made a new high, pulled back 2 points, you usually want to buy it. In this case, I wouldn't be buying this with the VIX pointing up and the Treasury's pulling up like that. See that? But that if you're a directional trader, I could make money trading this, and this would be a position, not right now, but something where I'd be feeling like I've got the mindset, okay, with 2 points off the high, it's pulled back, it's grinding up. This is a buying spot. This is like a micro buy the dip, again, microstructure. But like not with treasuries facing up and the VIX facing up. No fucking way, Jose. Anyway, so that's that. Hope that gives a little more insight. As I said, there's so much I can't articulate. There's so much about feel, about speed of the markets, about so too much. I can't really explain it, and that's also why I trade the VIX, because it's somewhat of a riskless instrument if you know how to trade it. S&P, it's got so much upside, so much downside. You get it wrong, you can really fuck up. But on the VIX, you know, there's somewhat of a floor, and you can keep buying it if needs be. And again, that's like when it comes to daily profits. I may come in and out of several trades. Wasn't as clean as yesterday's one big trade, but usually I'll be making more than one trade or rebuying. It gets less clear, but it gives a little bit of understanding. The VIX goes up from 16 to 17. If I get into a trade at 16 and it goes to 17 and I don't come out, that's 1%. And that's kind of the way I work it. Of course, as I said, it's not that clear, because often I'll be in and out a couple of times if I want to just grab a little profit, and so on. But yesterday was one big trade, and I'm just going to take a screenshot of this while I'm in here so I can do the numbers. Okay, Mr. A, I will catch you on Skype later. Bye.